Hey everyone, Mike Gutierrez here with Health Markets. Hope you all had a good summer. Hope you're enjoying this fantastic start for Lions football. Go Honolulu Blue. The Michigan Wolverines are looking fantastic and the Wings are off to a great start. It is a good time to be in Michigan, but it's also open enrollment time. So we need to talk about what's changing in the industry. We need to talk about what's going on with all those insurance carriers, and we need to talk about what you need to do to make sure you have the best plan for next year. So please stick with me for about the next 5 or 10 minutes as we go through all of the plans and the changes for the non-Medicare options in Michigan for 2024. So let me share with you my screen. I have created a little PowerPoint that will allow us to go through all the important changes. All right, so briefly want to touch on who we are at Health Markets, just as a reminder, because I think it's very important. You know, we do work, of course, with health insurance, life insurance, Medicare, long-term care, annuities, dentals, visions, disabilities, etc. We work with over 200 different insurance companies, and I think that's really important to point out, because if you're not happy with Priority, great, we'll get you on a different company. If you're not happy with Blue Cross, great, we'll get you on a different company. We can get you on whatever plan you are happy with, and we can shop it to make sure that you have a plan that you like. We also, therefore, can help pretty much anyone in any stage of life, whether you're young and fresh out of college, whether you're already retired, anywhere in between, we have the products and services for you. And lastly, we have the best price guarantee. What that means is you're not paying me, you're not paying for my services. You can't find the same plan cheaper somewhere else. We guarantee that if you work with us, it'll be the cheapest plan out there in the market, no matter what. So, first, changes for this year. New office. If you're in the Belleville area, hopefully you have seen it. Couldn't be more proud of the new office location. We have moved away from the tiny little office on 5th Street to 186 Main. And we are very, very proud of what that building has turned into. Please drop in and see us. Thank you to everyone who came for the grand opening. But we are very happy to be able to serve you right in downtown Belleville. But I want to spend the balance of our time talking about industry changes, because there are some things happening this year that you need to be aware of. So I'm going to put this screen up here for a minute, and by all means, I strongly encourage you to pause and digest the information that's here, because what this screen represents are the different ways that you can purchase health insurance in the individual space. There are 4 different types of plans that you can buy, and there are only 4 different types of plans that you can buy. And so when you hear the telemarketers of the world, when you see these TV ads, rest assured everything that's being advertised is falling into one of these 4 categories. So let's talk through them. That first column, major medical coverage, that's the Affordable Care Act. That's the marketplace. That's Obamacare. Whatever name you want to use for it, that is what that first column is talking about. And yes, you can see all the check marks that come along with a marketplace plan. And so marketplace plans are typically more expensive because they cover all of those check marks. And so many people want to get their rate down. And I understand why you want to get your rate down. And if you're looking to get your rate down, you're probably going to need to go with one of the 3 other plans. Now, we work with all of those 3 plan options out there in the individual market, so we can help you find those plans if you want to go short-term, if you want to go fixed indemnity, or if you want to go with a share plan. But as you see, the short-term plans are going to have a lot of excess of what they won't cover. They're cheap because they're pretty much just catastrophic coverage. The fixed indemnity plans have a lot of excess in regards to what they will and won't cover. Again, very inexpensive because they put very strict internal limits on the plan. You heard about the plans that are $99 with a $0 deductible, $140 for a family where you can have doctor office visits for $5. That's a fixed indemnity plan. Those plans focus on the small stuff and the small stuff only. If you have cancer, if you've had a heart attack, if you need major coverages, hospitalization, surgeries, trust me, you don't want a fixed indemnity plan. And then the last one is one of these share plans. So the health share plans, faith-based plans, Christian healthcare ministries, Medishare, etc. So let's drill down and talk about what the changes are with each of these plan options for 2024. So with the marketplace, what's going on with those? Positives of a marketplace plan. They cover maternity. They cover preventative care. They cover pre-existing conditions. They are also going to give you the ability to get subsidies if your income is low enough. So there are a lot of positives that come with an Obamacare / marketplace plan. Other positives for this year, specific to the Detroit market, is Priority Health is coming out with a travel plan. Now, what that means is the majority of plans in the market have been HMOs. What that means is you can see only doctors in your house or doctors in your network. But if you go to Florida, if you go to Arizona and you have a cold or a flu, a non-emergency situation with an HMO, you won't have coverage. So another way of saying that is with an HMO, you have to stay in network unless it's a medical emergency. Well, this year, Priority has a great plan to combat that. They have a travel plan. And what that means is when you're in the Michigan area, you see a Priority doctor. But the minute you're outside of Michigan, you have access to any Cigna doctor across the country. So while you still have to stay in network, you have access to any Cigna doctor, which is a nationwide network. And yes, they will have doctors in Florida. Yes, they will have doctors in Arizona. So it is a great, great way for you snowbirds to get coverage when you're outside of the Michigan market. Secondly, there is a new carrier. United Healthcare is expanding their footprint, and they will have new products. Granted, it's only going to be the Beaumont network, so you won't have access to U of M. You won't have access to St. Joe's. You won't have access to doctors in Florida or Arizona, but there is a new carrier out there to shop around and look at. So what are the downsides of a marketplace plan? Well, I said earlier, if you're not getting those government subsidies, the marketplace plans are going to be your most expensive option. Secondly, almost all plans in Michigan are HMOs, with one exception. There is one PPO Blue Cross plan, which is priced so ridiculously that very, very few people have access to. The other part that you're going to see this year, if you are a current marketplace customer, you should see around an 8-9% rate increase. So we're hearing from Blue Cross. Now, these are statewide, so it doesn't mean every customer in every situation. But statewide, Blue Cross is going to have about a 7% rate increase. Priority statewide is going to have about a 6% rate increase. The Meridians and the other plans out there, about a 6.5-7% rate increase. Now, again, Wayne County might have 15% and Washtenaw County might have 5%. You still want to go through and see how that rate increase is going to impact you. But those are the numbers that we're hearing statewide. Now, those numbers are important because, believe it or not, a single-digit rate increase in the health insurance space is actually a low increase. Medical inflation is higher than regular inflation, and anytime there is a single-digit rate increase, it's actually a good number. Now, the positive to a rate increase here is if you are getting a subsidy, because if there's a rate increase and you're getting a subsidy, that means there's also going to be a subsidy increase. And so I know that's a lot of information. And here's the short answer to everything. You're going to get your rate increase letter here in the next couple of days. Most of them went out in the mail on the 20th. So you should have them here very, very soon. And so you will know exactly what your rate increase is. If it is a single-digit rate increase, that's actually a good thing. Keep in mind, though, that the rate increase letter you're going to get will show the 2023 subsidy, not the 2024 subsidy. 2024 subsidies won't come out until November 1. And again, we anticipate the subsidy will go up. So that means your prices should come down from what you're seeing on the letters that you're getting in the mail. I hope that's not confusing. I know it's a lot of information. Pause the video, go back, rewind it, watch it again. Hopefully that'll help make more sense. Lastly, with a marketplace plan, enrollment dates, January 1 through December 15. Now, I know that the screen says January 15, but if you want your policy to start January 1, you have to be enrolled by December 15th. Another way of saying that, if you see me December 16th, 17th, or later, your policy change isn't going to take effect until February 1st. So please, 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 if you're looking to make a plan change, get on our books as soon as possible. It is tremendously important that we get you on the front side of open enrollment because we get beyond slammed the closer we get to December 15th. Next, short-term plans. Very, very few people on this video call have a short-term plan. Biggest reason is because in Michigan, over previous years, a short-term plan has been a 6-month policy. And this year, the government, federal government, this isn't a Michigan thing, the federal government is making it to where short-term plans can only be 3 months. So we are going to really not have this as a viable option, because if you have to renew your plan every 3 months, that means you're going through underwriting every 3 months. That means you have a new deductible every 3 months. That's just not something I'm comfortable putting you guys into. So while the short-term plan is there as an option, you're probably not going to hear me or see me recommend it unless you need your plan for 2 or 3 months. If you're in between jobs, if you're graduating college and looking to get into your career, sure, a 3-month policy might work perfectly. But for the majority of people on this call, you need your insurance over the long term, and therefore a short-term plan obviously doesn't make sense in a long-term situation. Next, we're going to skip the indemnity plans. Why? Because I am not comfortable putting anyone on an indemnity plan. Okay, so let me take a minute and explain why. With indemnity plans, you're going to see so significant internal limits. You get cancer, it might cover $5,000 lifetime of chemo. You have a heart surgery, it might cover $15,000 or $20,000 lifetime for a hospitalization or a surgery. I can't, in good conscience, put someone that I know, someone in my community, someone who is a current customer on a plan like that. If you want that, by all means, talk to the telemarketers of the world, and they will get it for you. But you know what? When you talk to these telemarketers, they won't even mail you out the paperwork of what the plan covers, because they know how significantly limited these plans are. And so, yes, the share plans are out there, but let's be honest, if it sounds too good to be true, it is. And you can't get a $99 plan that actually has medical coverage. Sure, you can get a $99 plan that'll cover a doctor's office visit. Sure, you can get a $99 plan that'll cover a script, but you cannot get a comprehensive health insurance plan for $99 unless, of course, you're getting it subsidized by the government, which then brings us back to the marketplace. Okay, back on track. Last, the share plans. So these are going to become more of a viable option for the people who are looking to stay away from Obamacare. But let's talk about the positives and the negatives. The nice thing about a share plan, they're cheaper than a marketplace plan if you're not getting government subsidies. You can buy them all year round. You can get PPO networks. You can get maternity, but only if you're married. Because remember, they're faith-based. So you need to think that through, right? Let's think about that faith-based designation. They're not going to cover contraception. They're not going to cover if you get pregnant and you're not married. They're not going to cover anything that goes against their faith-based designation. So they won't cover you if you smoke. They won't cover if you drink. They won't cover any kind of pre-existing conditions for the first usually 2 to 3 years. So while this is a potential option out there, you still have to be careful with this, because at the end of the day, this is not insurance. It's a collective group of people who put money into a pool in order to pay your claims. There's money in the pool, they can pay for your claims. If there's not money in the pool, they can't pay for your claims. And they tell you right up front, it's a bullet point there. They don't guarantee that they will be able to share in your claims when it happens, okay? So share plan, cheaper than a marketplace plan, PPO networks, but no pre-existing, no preventative care. They make you sign that faith-based designation and live by that faith-based designation. And lastly, they're not going to guarantee that there's money when you go use it. Lastly, get a hold of us, okay? I need to hear from every single person that this video goes to. And I just need to know one of two things. Yes, I'm happy with my plan and I want it to roll over. The minute we hear from you and you tell us that you're happy with your plan, we're going to stop bugging you, because we're going to make sure your plan renews and you don't need to do a thing. Or we need to hear from you and say, hey, I want to make some changes. I've had a change in income. I've had a change in health. I moved to a different county. Whatever the reason may be, I'm not happy with my plan. Fantastic. We will shop a new plan for you. We need to hear from you. So please, please, please respond to us. Every single person on this call, please respond to us and let us know if you want to renew. Let us know if you want to review. One of the two, and we will get you set up accordingly. So you can reach out to me directly at extension 1001. You can reach out to Mandy at 1002. You can reach out to Noreen at 1003, or Brenda, who is our new scheduler, who is just knocking it out of the park. You can reach out to her at 1004. Of course, you have the email address, you have the website. You know, we're in downtown Belleville. Come by, visit us. It's a busy time of year, so you know what? Bring me some coffee because I'm going to need it. Or, you know, if you're a friend of mine, bring me a beer because I'll need that too. So I appreciate everyone's time. Yeah, I really, really appreciate the opportunity to continue to serve you guys and take care of your insurance needs. My commitment is that we will always keep you in the best possible plan, no matter what the industry looks like. So thanks again. Have a great 2024, and I appreciate the opportunity to help. Have a great day.